What's an accounting firm worth?
So the rule of thumb right now is most firms are selling for around one times revenue.
Yeah.
Once you start getting past 1 million, 2 million a year in revenue, then you start seeing 5 to 6, sometimes 7 to 8 times EBITDA multiple.
Okay.
But the rule of thumb is one times multiple for most firm owners, for most sellers. Now, the structure of that payout, of how you earn that payout, really depends on the owner risk. So you plan to sell in 1 or 2 or 3 years, begin that work now. Begin the transition now where you're really out of the day to day.
Really excited to and thankful, Michael, to have you here. So from Reconciled, I'll give you a couple seconds to just sort of do your quick intro, and we'll jump into a bunch of questions. Pretty free flowing conversation, as you know. So no formal agenda here. But maybe you can just sort of give the Coles Notes version of yourself, and we'll go from there.
Yeah. Yeah, thanks, Justin. Thanks for having me on as your first guest. So
Yeah.
that's awesome. I'm Michael Lee. For those of you watching who don't know me, I'm CEO and founder of Reconciled, and I had the privilege of starting Reconciled back in 2016. So it's been about 8.5, 9 years since launching. We're a national firm now, completely remote, with team members across the U.S. as well as in Argentina. And we're serving hundreds and hundreds of small businesses throughout the country, providing outsourced accounting services such as bookkeeping, payroll services, bank and credit card reconciliations, anything you basically do in QuickBooks, and integrating best-in-class apps, depending on the industry of the client, to handle other functions as well. We also provide annual tax services, advisory services, and HR services as well. Happy to be on and happy to share anything I can about growth in 2025.
So what percent of your business, where do you sort of divide up your business? Like what percent of your business is core sort of accounting versus advisory services? How do you think about that? And then as we get into that, I want to talk a little bit about growth, on both sides of that, both first on the accounting, right? Because that's probably what this audience is used to. But outside of that, it's, I want to try and talk about some of the ways you can extend those services to beyond just bookkeeping, beyond just the core accounting business. But how do you think about your business as you slice it up? How do you manage your time allotment around that?
Yeah, so the business itself is primarily an outsourced bookkeeping, full service accounting business.
Yeah.
That's probably 70% of our revenue.
Okay.
And then 20% of our revenue is what I call advisory. So it's the controller to CFO level kind of work. It's post-transactional, right? So this would be forecasting, cash flow management, FP&A kind of work, and advising clients. Then less than 10% of our revenue would be in tax preparation services, tax advising, and then HR.
Yeah.
So that's kind of the makeup. So most of our team, majority of our team, are basically senior accountants and bookkeepers that are providing outsourced accounting services, transactional services to our clients.
And how do you slice up your day, like your time? Because you're I think one of the things I've heard you talk about is getting yourself out of the world of being just a straight up accountant and getting yourself into this business mindset. So how do you actually spend your time?
Yeah, so I've had the benefit of building a great leadership team now over the past many years. And so really for the past, 2-3 years, maybe 4 years, I don't do any accounting work at all. I don't touch it. I'm not involved in the day-to-day of running the accounting services team or really any of the services functions. My primary focus is on business development, and when I say business development, I mean partnership opportunities, large sale opportunities or large client opportunities. Yeah. Going to actual trade shows. So I'm the only person that goes in person to vertical trade shows or accounting conferences. I speak at conferences on behalf of Reconciled. I'm the face of Reconciled.
I see you. You're here.
Yeah, exactly. So that's most of my time, and then I do some coaching, advising of other firm owners.
Okay. So if there's a people sitting there and listening to this and being like, okay, I'm in that, I'm still doing the accounting work seat. and I want to be like Michael. I want out of
Yeah.
that day to day, and I want to actually be doing the bigger business sort of stuff. You walk into an accounting firm who's sort of struggling with that right now. What are the things that you know you're going to find in there, and how do you, and what is it that you're preaching to get out of that?
Yeah. So there's a few common elements. I see this all the time. Okay. One is the owner themselves, so the firm owner themselves, they're still doing a lot of accounting services work. Okay. That could be tax returns themselves, that could be bookkeeping work, that could be advisory work. They've become a bottleneck on servicing. And the reason why is they absolutely believe they're the best service provider at their firm for their clients.
And they might be right.
And that might be right, but oftentimes, like if you think about a bell curve, you obviously cannot be the best service provider. You're not the only one for your clients. Right. You could be, but by average, you're probably average. Yeah. So one is you've got to get out, you've got to get this mentality of, hey, I can hire, and I believe I can hire out there other service providers, people to come work for me that are actually better than me, that are actually going to be better for my client, right? So that's one. Secondly is most firm owners, they've held close to the chest what traditional companies would call the account management or the relationship with the client. Yeah. And they've not done a good job at passing on that relationship to other members of their team. And if they get good at passing on that relationship, then they can easily then shift over the actual work as well. That is an intentional practice that starts at the beginning of the sales process. Yeah. And goes all the way into onboarding the customer to not you become the bottleneck.
Okay, so for people who know that's true, what's like stopping them? Is it that they've gotten comfortable with the revenue level and that it's hard to think about hiring somebody else and taking all that revenue that they might be making, and now they're going to take a bunch of it and put it out into the world and hope to see it creates a return? What typically stops them from being able to really do that? Is it just that they just need to have more faith in their team? Do they need a better team? What do you see?
There's a variety of reasons. One of them is that, look, if you want to have a business where you no longer are the main service provider and you have a team doing that, you actually have to grow it to a size where if you want to keep your margins the same, then you have to grow it to a revenue size that supports the ability for you to not have to do accounting services anymore, and you have enough team members doing that.
Is there a rule? Is there a number that you think is like ballpark that where somebody starts to get to that stage where they should be thinking about making that move?
Well, it really depends on the type of service you're providing as well. But I mean, I've seen it as small as half a dozen people, right? Where you have half a dozen people working for you. They're providing all the services. One of them generally could be a lead or the manager of all the team members. Yeah. And then you as the owner are doing everything else. You're doing sales, hiring, marketing, administration of the firm, etc. Because someone has to do all those functions, right?
100%.
And now here's the reality check. Most firm owners, if you were to break it down, many firm owners probably should be doing service providing because they're not going to be good at selling. They're not going to be good at hiring.
Yeah.
So they are an accountant. They're good at that, right? I knew for me, my best strength for my firm wasn't doing the accounting services. Yeah. I'm an okay accountant. I'm a pretty good CFO, but I'm a really good salesperson. Sure. I'm a really good marketing person, and I'm a great culture champion. So there's some firm owners where you might need to just go hire an admin to do the administrative work. You might need to go hire a salesperson to do sales work because you haven't built up the skill set or you just don't have the natural competency around the other functions around it. But if you want
it's really about knowing your lane. Like you can't just say, I want to grow this, I want a firm. I now need to go out and start pitching people. Like that might be the worst idea.
Right. You might not be great at it. Yeah.
Right. You might be an internal, there's from good to great is like an analysis of some of the best managers. And one of the overarching principles of it was that they were very inward. Like not many of them were sort of these outward, bombastic folks that were selling. They were very like, they had grown up at the company and they had, and they're traditionally just very, very like sort of introverts, I guess is the best way to put it. Mm-hmm. And so in that situation where somebody thinks about the last thing I want to go do is start to go doing sales, or do I have to go do I have to go on a bunch of podcasts or go speak in front of that's my own personal definition of hell. They need to go figure out, they need to then at least find the time and the revenue to go hire somebody who's good at that. And is that the right answer? And does that person need to be internal? Can you outsource? Can you go find firms that do that? And if so, how much does it cost to find those firms? And how do you deal with, I don't know, the idea that, well, let's first cover that. Let's first cover okay, I'm not going to be the salesperson. I got to go find somebody to do that. That's something. Where are you looking for that stuff?
Yeah. So in the beginning, you as the founder, whether you're introvert, extrovert, whatever, you're often going to be the only person selling, mainly because you don't have any revenue yet. You don't have any money. So I tell people, look, if you're an introvert, you're not an outgoing person, you don't feel like you have sales skills. Well, where you can start is just start with your own network. Let your network know, your friends, your family, your peers, your LinkedIn network know what you're doing.
Yeah.
And why you're doing it. And if you can't share with just your own natural network and they can't get you, you can't get business, you can't get leads, it might be a challenge. You might have a big challenge if you're a natural salesperson networker. After you've got kind of this base of clients, then there's multiple ways, obviously, to get leads, right? There's focusing it on inbound, whether you want to have an online presence. And I know a lot of introverts where they're really great at just doing the online presence, creating videos where they feel safe, they can control the narrative, they can control the video and edit it. But they're not going to go out to some big function and just go networking, right? So you got to find your lane around that. But then any of these things we're talking about, marketing, sales, HR, admin, all of these can be outsourced, just like accounting services can be outsourced. We're asking our clients to outsource their accounting services. Marketing, sales, all of that can be outsourced. And depending on the level you need, the complexity, how fast you want to grow, then that's going to determine the pricing. But you could find as simple as cheap marketing, branding web people on Upwork and Fiverr, all the way to very professional, high-end service providers on LinkedIn that are based in the U.S. Yeah. So it really depends, and also ones that focus solely on the accounting market, right?
And how do you figure out? So I've got a bunch of friends in different industries, and I'm in this industry. Tech is sort of native to me, so I can, and growth is sort of a native language that I speak. So I can talk to somebody and I can figure out if I'm getting taken for a ride or if this company is worth, right? But I go talk to, it may not be accountants, but I go talk to a bunch of friends in a trades industry, right? And they get 15 different emails a week from different companies offering them, to write blogs on behalf of their plumbing company. And it's like, well, no, don't. And I'm just like, probably don't return their calls. How do you vet? Should they, if they don't know what you know, who should they be talking to? Talking to their friends or colleagues who have some experience with this. That's what I tell. When my friends call me, I say, let me talk to these people and tell you where.
Yeah. There are providers with reputation. There are providers with reputation now. Yeah. There are service providers that are serving firm owners all across the country and the world. Yeah. And then, if somebody's watching this, they literally can just reach out to me as well. I can give you recommendations to a lot of people. So you'll find that the industry is very giving. Firm owners like myself are very giving, willing to share information, willing to share our contacts. And so if you're meeting with the service provider that's reached out to you, ask them, can you give me reference to any number of accounting firms that you've worked with in our space? And so I can talk to them. But also reach out to somebody like me, reach out to somebody, other firm owners that have grown, and ask them, how did you grow? Who did you use? And so, for example, I've always given recommendations on outbound email providers. GrowBots is an outbound email provider I've used. Yep. I've talked a lot about them. I'm not scared to share who I've worked with and
Right.
what has worked.
Right.
So that's
Yeah,
what
it really that's the even if you're scared about the potential of it, it really is just reputation. Like ask people in the industry. They will tell you who's good, who's not good, and then you can put some of this into the hands of experts, right? And that's being able to turn that corner is probably an important part to figuring out some growth. So outbound email, outbound calls, just that as a lead acquisition. You can take the call. That doesn't mean you need to be the face of the organization,
Right.
but you can talk accounting and talk service all day long when you get these clients on the phone. That's a very comfortable environment for a founder or something to be in.
Yeah. One of the recommendations I have to founders is, this is my rule of thumb. If you get an inbound email or outreach from somebody using gmail.com or yahoo.com or Hotmail or AOL, ignore them.
Right. Yeah.
They're just obviously not a serious business person, in my opinion.
Yeah.
They don't have a domain name. They don't have a website that you can go look them up. So that's one rule of thumb. It's just very simple. And that flags out probably 50 to 75% of the emails I get on outreach is, are they just using a generic free web email, and they're not investing obviously into a domain name or a website. That's a big flag to me.
Okay, that's interesting. As we turn the corner, sort of going into 2025, we talked a little bit about chatting about some sort of tax season optimization. How do you separate yourself from the? I've got really, there's like an efficiency part of this because if you can run efficiently, you have time for service, right? Sometimes I talk to my accountants that I've used, and their emails practically look like they're on fire during tax season, right? Like you can sense the stress in the response. So how do you figure what are the low hanging pieces of fruit for optimizing sort of the processes to buy you that time, to give you that headspace to go out and think about these growth opportunities, and especially as we get into like turning the corner towards sort of the busiest part of the season.
Yeah, so there are really two directions you can take with this.
Yeah.
One direction is, as a firm owner, do you want to control the customer experience that your tax clients have with you?
Okay.
The other direction is, as a firm owner, do you want your customers to dictate the experience that they expect you to give them?
Okay.
Those are two different things. And we're at a point now where the bar, like the main bar, which many people experience, are online services like TurboTax.
Yeah.
And the convenience they provide in doing your tax return or anything like them is so high that you've got to decide, okay, how do I really differentiate myself from a TurboTax? Or do I just send the client that is going to be difficult or that I don't want to work with, just send them over to TurboTax, okay? Because frankly and unfortunately, most firm experiences, tax experiences, are way more terrible than the TurboTax experience. It's not convenient at all. It's annoying. You fill out a PDF form still. You send it back.
My experience alone is just like
it's abysmal. It's
abysmal. The bar is so low.
Yeah, and TurboTax is charging more than most accountants, most tax preparers. They're charging because the experience is so convenient.
Yeah.
Right. It's so easy. And I've used them before. Right. I'm ready to admit I've used them before, and that convenient experience beats out many things. So, as a firm owner, if you want to be in the driver's seat of that customer experience, then you've got to intentionally think through each step of the way, and how can you start with that experience now?
Yeah.
Don't just wait till January, February when everyone else is reaching out. What can you do now? Can your staff do now to get your clients ready so that the experience that you want with your client is defined by you?
Can you give me an example? Like, can you give me one like very concrete example that like somebody could do?
One simple example. One simple example is this. Can you change from sending an email out to your client with a PDF of a checklist to an actual tech digitally driven onboarding experience?
Right. Yes.
And there are tools out there that do this.
There are 1,000 tools.
Thousand tools. It could be as simple as, can you use Google Drive or Dropbox or Box?
Right. Yeah.
That can be very simple to actually using software where the client is text a link, they open it on their phone, they can upload documents now as they're getting them in real time, and it's all driven by text messages and an app, right?
Yeah.
So you can go for, well, that takes time to implement. Don't wait till January. Implement it now. All the tax software providers that provide this onboarding experience, they are signing people up now.
Yeah.
And so get signed up now. And the hard part for a lot of firm owners is that they're tired from the extension season, and now they're entering into holidays. So they have this really short window, and they just want to rest. But you're resting because your tax season sucked.
Right.
Right?
Yeah.
And
Yeah.
You didn't control the narrative. You didn't control it. So that's one. Secondly is, I've seen many of the smart practitioners go, look, raise your prices right now. Let the clients know you're going to raise your prices. I've seen tax professionals raise their prices 30%, 50%. They increase revenue and they dropped the client count.
Right.
So they have less work with increased revenue. That is so smart. And I think most tax professionals have to get over this idea of, well, I don't want to upset Jimmy and Jerry in my community that you've never raised your prices on for years. They've gotten a steal from you, by the way.
Yeah.
They've treated you unfairly because you've never raised their prices. So raise your prices.
Okay.
And decrease the client count because you're underpricing. And we know this because they've done the comparison. Firms are underpricing compared to these other online providers.
Yeah.
Clearly underpriced.
The worry in almost every industry around raising prices is over indexed on, and people expect, because it's okay, if you're going to go out with something crazy, fine, but people are expecting, with inflation, everything's gone up, and nobody's emailing me that I have a one-on-one relationship with saying like prices are going up this year. Like, so few of them.
Very few.
Even
and like
software firms aren't doing it enough. It's really so two messages. One, if I as a client have to download a PDF and then fill it out and then re-upload it and send it back to you, I'm having a bad experience. Please learn what Typeform is, what Google Forms is, what a Google spreadsheet is. Anything that I don't have to please, and then raise your prices. Okay.
Right. And likely, if a client is not leaving you after that bad experience, it's because your prices are probably too low.
Yeah.
Like your prices are so low that they're like, well, it's so cheap that It's like, well, how about you raise your prices and then make the experience better, right? You have revenue now to make the experience better. And also, you're paying your team members more money too. So you have to let your clients know, look, everything's gone up, right? Everyone knows everything's gone up.
Yeah,
so
exactly.
Raise your prices.
Okay, turning the corner to some of the firms. So Method is a CRM. We work with SMBs, and so we work with lots of accountants. Accountants sell our CRM to their businesses to automate process flow. A lot of the conversation around accountants, especially because of like things like TurboTax and all of the online services and the outsourcing, are trying to find how to build a business that's got a higher margin part of it, or a consultancy, an advisory service. How do you transition your relationship with customers? Can you do it with existing customers into more of this advisory? Do they need to be new because they sort of pigeonholed you into this accountant, and all of a sudden you want to come and talk to them about growing their business, and they're like, no, I already how do you make that transition? And are there things that you're listening for? Are there pitches or like phrases that you use to like turn the conversation?
Yeah. So I like how you began with the positioning. So oftentimes, most firm owners have positioned themselves to be the transactional service provider.
Yeah.
So I do data entry for you. I
Right.
record your information. And in the whole time of the relationship, I've not given you any insights. Okay.
Yeah.
You can, with clients you've done that transactional work for, begin giving insights and begin introducing yourself and positioning yourself as the insight provider. Now, that might mean you have to start doing little insight tidbits or little insight drops for free just
Right.
to get the client to see, oh, there's a different position you're in. So that, for example, if you're already doing a monthly or weekly phone call or video call to review financials, well, maybe drop in an insight now, drop in trend now, drop in trend analysis now. Begin asking questions that position you in a different light,
Yeah.
right? Begin asking questions that aren't transactional historical anymore. Begin asking questions that are more emotional, that are more felt based, that are
Yeah.
more, questions like, what's keeping you up at night right now?
Yeah.
Right? What
Yeah.
challenges are you facing today that you feel like you need help with? Right?
Yeah.
How can I help you more? So that you get out of the transactional conversation. Firm owners are so used to, bookkeepers so used to talking about debits, credits, expenses, things that happened in the past.
Yeah.
But when's the last time you asked, hey, what's keeping you up right now? Okay, oh,
Right.
my supplier's late, or I can't get the terms I want, or I'm worried about cash flow right now. I don't have a line of credit with my bank. Okay, now whether or not it's an accounting related question, if you can be helpful in that conversation, and if you could point in the right resource, all of a sudden your position's changed.
Yeah.
And so you have
Yeah.
to start leading into those things. And then you begin offering, hey, by the way, I really liked I'll help you. I want to help you more, and I want to do it more formally. Can we start having advisory meetings
Yeah.
that are separate from our transactional meetings? Or can
Yeah.
I introduce you to advisor on my team?
Yeah.
Okay, so that's really the position side that I think firm owners need to begin. It all can begin with questions. That's all it has
A
to
simple
start
like,
with.
how are you doing?
Yes.
Just even like a simple, how are you doing? Or seems like you're stressed about this,
Yes.
right? That you're just trying to get, you're trying to get you're trying to get what is a transactional conversation out of it and get into emotion. And the moment you get into emotion, you're able to understand what a client actually, what's actually driving the behavior, the business forward, and what a business is struggling. And a lot of that stuff you're not going to be able to fix, right? But a lot of it will give you some insights, and we'll open that conversation. If you can get talking about emotion, I used to do an exercise when I was a consultant about, I would say, if we were sitting down here a year from now, what has to have happened over the past year for you to be happy with your progress? And they would start to go from being stressed to being like imagining the future. And that future was a future of like possibilities. And those possibilities started being like, oh, there are areas where, if you want to do that, you're going to need a better cash flow. You're going to need to be in a position where you can demonstrate strong revenue, and maybe you've got a big cash business, so you need to be able to demonstrate that so that you can put yourself in a position to be in front of a bank and get debt. There's all these interesting conversations that you can have once you get out of just this transactional world. Okay, fine. Anything else on that before I jump into something?
No, yeah,
totally
and
different?
then the other thing you can be doing is throughout the month in your relationship with that client is just setting them little insights outside of your formal call. So it could be, hey, client, I'm thinking about you. I saw this, debt opportunity with my bank or with your bank. Saw this speaking opportunity. I saw this conference that I thought would be good for you to attend, or I saw this webinar that you would find some helpful tidbits on. The other hack I like doing too is if you as a firm owner, if you find yourself outgoing, you like interviewing, is to start a podcast or just do a live interview of your client online, right? So we've showcased clients on my own social media channel just because I want to give them more exposure, and I find what they're doing interesting. So just doing little things where you're adding value, and it's honestly like it's just your time. It's not anything. It's not a heavy lift, but it starts positioning you in a different light than this is just my bookkeeper.
Okay, going in a very different direction. This is mostly to scratch my own pitch, but you do part of the way that you've grown is through acquisition. You've gone and acquired. Being in the tech world, I think about acquisition all the time. Like everybody's buying everybody else.
Yeah.
It seems people are getting a bunch of money in. When you think about buying accounting practices, where are you finding them? What are you looking for? What are when you get behind the walls of the firm, what are you looking for? What scares you off? What gets you excited? And then let's talk about that quickly, and then I'll ask a couple other prying questions.
Yeah. So obviously the ways to find firms are numerous, but there's three primary ways I look for them. One is proprietary outreach. So proprietary outreach would be, I am literally doing active cold outreach to firms across the country that I've done research on and fits a profile or criteria I'm looking for, right? And that's gonna be different for everybody. For me, it's gonna be firms above $1 million a year in revenue. That's majority bookkeeping services, some tax, no audit, and where the profile of the company looks like they're a little more tech forward or beginning that transformation.
Yeah.
And they could be centered in one location, that's fine, one metro, that's fine. But that's what I'm looking for. The other way to start looking for them is I've built a natural community of accounting firm owners. I have 12,000 people that follow me on LinkedIn. I'm at every accounting conference, major one, I speak at them. So I've built this natural community.
Yeah.
So I get natural inbound now, right? So I talk about buying and selling accounting firms, so I get this inbound. And then the third way are brokers who represent firms for sale. And they have listing websites like accountingpracticeexchange.com is like the aggregate website for all accounting brokers and all accounting firms that are listening. And then there's also big accounting brokerage that are selling firms, as well as small ones. So accounting brokers, I get outreach from them and also reach out to them asking for, hey, if you have any firms fitting this criteria, please reach out to me.
Right.
I want to evaluate. So there's three primary ways of looking for them. And then when you get behind the scenes, really the primary thing I'm looking for is, does this firm have owner risk or founder risk, where if the founder transitions, depending how fast or slow they are, when they transition out, is this firm going to fall apart?
Right.
Are the clients
Are they one of those ones we talked about at the beginning that has piled everything on their back and they're dragging the firm along? Yeah.
Yeah, and the way you could tell that is one easy way to ask is, when you're ready to go buy the firm, is ask the firm owner, how much of the revenue is dependent on you? How much of the revenue are you billing as a firm owner? And the reason why a lot of accounting firms have high profitability is because the firm owner is doing 50%, 100% of the revenue.
Yeah.
That's a big recipe for disaster, because that means they carry the relationships. They likely don't have good systems and processes where they've passed the work on to staff members. And the firm's day in and day out relies on them as an owner being involved.
Yeah.
And so unless you have a huge amount of confidence that you as a seller can transition those client relationships over, it's likely you're going to churn a lot of that revenue.
Okay. And what is just another check mark for getting your systems in order, right? If you ever get tired of this business, you want to go exit it, and you haven't done any of this, you're a lot less of a viable target for acquisition.
Yeah, for sure. It'll be very challenging for sure. And so delegation from the beginning is going to be very key. Documentation and delegation of your work is going to be key, especially if you plan to sell in 1 or 2 or 3 years. Begin that work now. Begin the transition now, where you're really out of the day-to-day involvement.
What's an accounting firm worth? Like, what's the common multiples that you're putting on it? And if you're a seller, how do most founders want to structure that earnout? Or is there a part of that, or is it just, are they out? Do you build an earnout process? How do all of those terms typically work?
Yeah, so the rule of thumb right now is most firms are selling for around 1x revenue.
Yeah.
And if you convert that into an EBITDA multiple, that can be anywhere from 2 to 4 times EBITDA multiple, depending on the profitability mix of that firm. So most firms, especially most small firms, are selling for 1x revenue. Once you start getting past $1 million, $2 million a year in revenue, then you start seeing 5 to 6, sometimes 7 to 8 times EBITDA multiple.
Okay,
Okay.
yeah, okay.
EBITDA multiple, right? But the rule of thumb is 1 times multiple for most firm owners, for most sellers. Now,
Yeah.
the structure of that payout, of how you earn that payout, really depends on the owner risk.
Yeah.
So if you have a firm that's cranking where the owner's doing much, maybe they're just doing sales, they don't own the relationships, and they're not known by most of the customers, there really is processes and procedures in place, then you could probably get a lot of that payout, or a large majority of that payout, up front. And
Yeah.
then over 12 months or 24 months, get the remainder of that payout based on revenue retention. For firms where there's a high owner risk, or the firm's not big, you're then going to see, I've seen of firm owners join as partners of the new firm they got bought out by, and then they're there for 4 or 5 years earning their earnout.
Right, okay.
Right. And
Okay.
so that's really hard for somebody who wants to retire tomorrow. If they're
Yeah.
5 and they're like, look, I'm done. I have to wait till I'm 70 to get fully paid
Right,
out.
they gotta go put it on the market. Then they gotta wait a year to like get acquired. Then they got another 5-6 years. So put your process.
And unfortunately, because most firm owners were so stuck in doing the work themselves, they didn't have a good succession plan. So that's how they're stuck. So a lot of firms, especially tax firms, they're going to be stuck with that kind of reality, or they just close shop. I've seen firms just shut doors and they don't do anything.
It's crazy. It's crazy to not to be in that. Be in that.
Yeah,
I've
I've
all of that
$1 million
into
firms that they just close shop. They can't sell because they haven't set themselves up with success, or even with a staff member willing to buy, because they're so involved in the work. Yeah.
So wild. Okay. I think that covers everything I was hoping to cover. The final question is just if people liked or found something interesting from this, or want to hear more about this, where are people that are talking about this stuff for these firms hanging out? Where are you hanging out? If you're online, where are you hanging out? And if you're in person, what are the conferences that people are going to? That sort of stuff.
Yeah, so there's definitely a lot of activity happening online. If you go on LinkedIn and some on X, there's definitely a lot of firm owners like myself sharing information.
Yeah.
If you Google my name and podcasts, you're going to see a lot of podcasts and webinars I've been on, and all that information's free. So take you get what you pay for, and take that information, and really it's really about execution at this point. All the stuff that me and my firm friends share, it's nothing novel. It really is about execution and being thoughtful about that execution. In-person events, digital CPAs coming up in Denver next month, and then the major ones that people hang out at is AICPA Engage, Intuit, or formerly QuickBooks Connect, Bridging the Gap, Gusto next. So there's a number of them. If you search accounting conferences, there's a number of national ones that we're at.
What's your favorite?
Yeah.
What's your favorite?
My go-to every year is Intuit Connect. I definitely make it out to Intuit Connect every year. I was just there in Vegas.
Yeah.
So it's a great conference. And then I'm usually, whether attending or nearby the other conferences, and I'm usually hosting events or hosting different functions. If you're a firm owner and you want to hear about my event in April, I host a private event in April at the after tax season in Scottsdale, Arizona. I'm happy to share more information about that with any firm owners that reach out. So there's a number of events out there that are happening that you definitely should engage with people and attend.
Okay, perfect. Really appreciate it. Thank you very much for this. So end it. The first of these. There'll be many more, but really appreciate the time and energy you brought to this. And thank you very much.
Awesome. Thanks, Justin.
Okay, thanks, Michael. Take care.